What a week for semiconductors. AMD finished over $200. Dell Technologies was up over 31% thanks to AI servers. We also see Supermicro up over 12% after hours, and Nvidia up 4% sitting at $822. On today's episode, I want to take a closer look at everything that's impacting these semiconductor companies, more specifically what's happening in the AI market. So let's take a closer look in today's episode.
I want to thank The Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for their subscription service. Now, let's continue with today's episode.
All right, so first I want to start off with Supermicro. We can see the stock was up over 4.5% today, and after hours the stock is up over 12%. And if we take a closer look at, like I mentioned at the intro of the video, most semiconductors were up big today. We even had Dell up over 31%. Dell was pretty much driving a lot of the gains in the semiconductor market. As we're going to take a closer look in a bit during their earnings call, they did mention a lot about the overall demand for GPUs, about the overall demand for AI servers, which obviously bodes well for Supermicro, for AMD, and Nvidia. But after hours, there were some surprising news, but Supermicro is joining the S&P 500 after the stock price soars more than 20-fold in 2 years. So I know today there was going to be kind of a refresh in the S&P 500. Some companies were going to end up replacing other, and it does seem like Supermicro is going to be replacing Whirlpool in the S&P 500. The reason the stock is up a nice amount is usually when a stock enters the S&P 500, you start to see other funds start to add on to Supermicro as they track the S&P 500. So right now, you're going to end up seeing a nice influx on volume on Supermicro, where originally this is already a company that tends to have very low stock float. So I do believe we're going to see probably some crazy movements as more funds continue to add Supermicro into their overall stock portfolio. To me, that's not a reason to own this company. I've talked about Supermicro in the past. I definitely see the growth opportunities, but it's not just one. It's not one that I personally would enjoy in my overall portfolio. So congratulations to all the Supermicro computer holders. It's definitely been a great year and just a great few months for you guys. So before we go any further, I just want to say thank you all for the amazing support we are getting in this channel. We're closing into 40,000 subs. That is insane. So if you haven't and you are enjoying the content, make sure to hit the thumbs up and the subscribe button. Finally, if you want to support this channel a little bit more, check out my special offer at fool.com/Jose. Now back to today's episode. Now, I want to take a closer look at Dell Technologies. We've seen some reports that Dell actually reported earnings yesterday, which really caused the stock price to jump a nice amount. If you guys want me to do a Dell Technologies full video, let me know in the comments below, and I'll probably release that later this weekend. Right now, I just really want to take a closer look at what they said about the AI servers, what they said about Nvidia, what they said about AMD. So during the earnings call, they did mention that the demand continues to outpace GPU supply. Though they are seeing the H100 lead times improving, they're also seeing strong interest in orders for AI optimized servers equipped with the next generation of AI GPUs, including the H200 and the MI300. So obviously the MI300 is AMD's baby and the H200 is Nvidia's next baby. So that bodes well for both these players. AMD pretty much has really small breadcrumbs, if you want to call those scraps that AMD is getting right now. They're only expected to do $3.5 billion in revenue this year. I do believe AMD is sandbagging those numbers is going to be a lot higher. But when we continue to see big server makers like Dell mention that they're seeing huge demand for the MI300, this bodes well that AMD is going to continue to outperform in data center GPUs, and why we've seen a nice run up in the overall stock in the past 5 days or so. We can see in the past 5 days, the stock is up over 13%. The other thing that I thought was pretty interesting, they mentioned that most customers are still in the early stages of their AI journey. So that could be seen as more bullish case scenario for AMD and Nvidia, as this kind of showcases that, hey, look, the overall demand is just starting. We're going to continue to see purchases of AI servers for multi years from here. One interesting note, the CFO mentions that the macro environment is leading customers to be more thoughtful about their infrastructure budget, particularly in the first half of 2024. So I think this is insane because we've seen a lot of big players and a lot of huge demand for AI servers right now in the first half of 2024. Now, we're seeing that because of macroeconomics, most customers are actually being very, very thoughtful. I can't imagine if in the second half of 2024, if customers start to be less thoughtful, what kind of budgets are we going to see for infrastructure solutions in the AI market? So, again, that could be another fuel to continue to grow this AI market right now and the overall sales of GPUs from AMD and Nvidia. The COO also shared that both cloud server providers and number of enterprise buyers are the ones really focused in the AI market. So obviously we know that the cloud server providers are pretty much dominating this space, but we are seeing the enterprise market that could be a nice potential customers for AI solutions. And we're going to see why they think that in a bit. But again, they mentioned that this demand is spread across pretty much all of NVIDIA's and AMD's portfolio, the H100, the H800, the H200, and the MI300, and upcoming B100 from NVIDIA later. There was a question by an analyst that really focused kind of in sovereign AI. And we've heard this being something that NVIDIA mentions a lot, where individual countries are developing their own AI solution, and Dell actually had some things to share about that. They said, and maybe the last part of your question is there certainly a lot of energy and opportunity around these emerging nation state opportunities building out AI and rebuilding their economies around these modern technologies. We believe we're in those discussions. We believe that's very untapped opportunity in the marketplace, and we're certainly with our geographic coverage and our go-to-market coverage, I believe we are in the game. So this kind of just showcases to us that the sovereign AI market that NVIDIA is talking about might still be in early stages. So that could be a later customer for the AI market, but we can see from Dell that this is definitely an opportunity and kind of an untapped opportunity. So if we ever start to see weakness in maybe the cloud server providers and ever the enterprise, there could be a time where the sovereign AI can start to pick up a lot of that slack if we ever see kind of that demand slow down in the next few quarters. The final thing I want to take a closer look at from Dell's technology earnings is where they believe a huge opportunity for them is, and that is actually where most of the data is coming. They believe that 83% of all data is on-prem, and AI moves to the data. More data will be created outside of the data centers going forward than inside the data center today. So again, this could be a huge market opportunity as well, and another kind of force that makes sure that there's no lack of demand for AI servers, as right now we're seeing a lot of demand in the cloud server providers. But eventually, as kind of all these companies want to hold their own data and create kind of their own AI solutions, they're going to also start to build their own AI servers or increase the demand of AI servers, which again boosted demand for GPUs from both from AMD and Nvidia. So during the overall earnings for Dell, they did have a very bullish sentiment of how they're growing their AI server solutions, which obviously caused the stock price to jump over 31% year on the day, right? And we're gonna take and like I mentioned, if you guys want me to do a full in-depth on their earnings, feel free to let me know in the comments below, and that's something I will take a closer look later on. But because AI servers are doing good, obviously bodes well for Supermicro, AMD, and Nvidia. Now, I want to take a closer look at PE ratios for the four companies that I talked about today: Nvidia, AMD, Supermicro, and Dell Technologies. But next, I actually found a pretty interesting article here on WCCF Tech that reports that Nvidia becomes TSMC's second largest customer, coming right behind Apple. And there's no real way to prove this. I do believe there's an analyst on Twitter that kind of mentioned this, and this is where a lot of these news outlets are getting it. But if you go to TSMC's 10K report, their annual report, they have to mention if there's any customers over 10% of total revenue. And previously, there was only one customer. In 2022, there was customer A, which represented roughly 23% of the company's total revenue. And that's Apple, right? Apple is the big player that spends a lot of money in TSMC. Now, customer B has never been in the top 10, but here in 2023, they accounted for 11% of TSMC's total revenue. So, I mean, if in the semiconductor market, there's only probably a handful of players that you can think of, and that have that kind of volume, I think at the end of the day, because of things like CoWoS packaging, the advanced packaging solutions, and NVIDIA seeing the huge demand, and they constantly saying that they're improving their overall supply chain issues, it's safe to assume that that customer B is Nvidia, and it's now 11%. So now I want to take a closer look at PE ratio forward. We can see that the cheapest out of the four that I'm looking at here is Dell Technologies, sitting at 17. I also added Google just to kind of see where it lies compared to maybe some other big players. Google is sitting at 20, Nvidia sitting at 33, AMD sitting at 55, and Supermicro sitting at 41. Dell Technologies definitely looks pretty cheap. I don't know if I would buy it. I do believe the hardware market needs more of a cheaper valuation compared to some of these players. So if you were to ask me, Jose, would you buy Dell Technologies based on forward PE ratios? My answer would be no. If I had to choose one based on valuation, I think Alphabet is the perfect mix of valuation and growth opportunities. Now, if we take a closer look at forward 1 year, we can see that things start to get cheaper for Dell Technologies, sitting at 15.26. Now, that doesn't seem half bad, but when you have Google right now sitting at 17.67, again, I would rather pick Google than Dell Technologies. We can see Nvidia is the cheapest out of the three that we've talked at 28, AMD is at 37, and Supermicro is at 30. To me, I think it's insane that Supermicro is anywhere near the valuation of Nvidia and AMD based on these ratios. I do believe Supermicro doesn't have a true moat like AMD and Nvidia, so it doesn't deserve to be in that same place. If it was up to me, Supermicro will probably have very similar valuations to like Dell Technology, or maybe a little bit of a premium to Dell Technologies, but not by much. Hopefully, that's just my overall thoughts and one of the main reasons I personally wouldn't buy Supermicro. So I hope you guys enjoyed today's episode. A lot of great news impacting the overall semiconductor market. If you haven't, make sure to hit the thumbs up and the subscribe button, and see you all next time.